GST 2.0 reforms have been built on 7 pillars. How it's going to reduce the prices? Ultimately, if the prices are not reduced, so primarily GST 2.0 is an effort for bringing rate rationalization. Now, the government has tried to reduce most of the products which are essential products to 5%, where the government is planning to bring under the GSTN so that the refund can be processed provisionally. From 22nd September 2025, the new rate structure is going to be applicable. Certain products got reduced from 5% to nil rate of tax, especially educational products. Subsequently, the rate reduction has to pass on to 1.4 billion population of this country. That is, whether the industry is going to withdraw all the products and going to issue a new MRP, or they're going to ask the retailers to stick a new MRP to ensure there's a check on the price reduction. GST 2.0 has been announced by the GST Council in 56th meeting. My dear friends, 56th GST Council meeting happened on 3rd September 2025, and we all saw the announcements on 4th September 2025 and we started feeling happy. But at this juncture, we have to understand what is the real impact and what are the products for which the GST got reduced, how it's going to reduce the prices. Ultimately, if the prices are not reduced, what is the remedy available under the law to complain? My dear friends, under the GST 2.0 reforms have been built on 7 pillars. The first pillar is about building on the success of GST. We all know GST came before 8 years and it's been quite successful and consistently there have been increase in the tax collection for the government. It is a success for the government, but at the same time, people are feeling the burden of the GST rate. Second important pillar is rationalization rates for fairer taxation. Third important pillar is simplifying filing through technology, putting consumers first, empowering MSMEs and manufacturers is the fifth pillar, and stronger states and stronger Bharat is a pillar 6, and pillar 7 is lower taxes is equal to higher spending. The object of the government in reducing the GST rate is to ensure we counter the Trump tariff 50% levied on India. We all know the production-led growth is going to have stagnation in the days to come because the exports are getting affected because $86.5 billion is the export to the US market. But to counter this, the government of India, Honorable Prime Minister, as part of his independence speech, announced for 2-rate structure. So primarily GST 2.0 is an effort for bringing rate rationalization. We all know under the GST, we have 4-rate structure. Of course, there are special rates for gold and diamond. Diamond is taxed at 0.25%. Gold is taxed at 3%. And most of the products are taxed at 5% and 12%. Essential products are taxed at 5% and 12%. Services primarily and predominantly it is taxed at 18%. And some of the products are taxed at 28%. For example, cement and some of the construction materials. And sinful product is one of the concepts where we have about 40% taxes levied with all the cess. Now, the government has tried to reduce most of the products which are essential products to 5%. What is this essential products? Products such as toothpaste, brush, soap, ghee, butter, all those products are getting reduced to 5%. It's a step in the right direction, but it was too late. At the same time, for a rate which is about 18%, some of the products at 18% still need to be rationalized, but 28% is cut down to 18% and 12% is cut down to 5%. And there are products which have moved from 18% to 5%. With this background, understanding the key reform under GST 2.0 is very, very important. I'm going to discuss sector-wise impact of the GST 2.0 reforms. First, on daily essentials. Products like hair oil, shampoo, toothpaste, toilet soap, toothbrushes, shaving cream have got reduced from 18% to 5%. Butter, ghee, cheese and dairy spreads have got reduced from 12% to 5%. Pre-packaged namkins, bhujia mixtures have got reduced from 12% to 5%. Utensils got reduced from 12% to 5%. Feeding bottles, napkins for babies and clinical diapers have got reduced from 12% to 5%. Sieving machines and parts have got reduced from 12% to 5%. This is about the essential products. Second important sector that has got impacted by GST 2.0 reforms is individual health and life insurance. 18% got reduced to nil rate of tax. Thermometer has got reduced from 18% to 5%. Medical grade oxygen has got reduced from 12% to 5%. All diagnostic kits and reagents has got reduced from 12% to 5%. Glucometer and test strips have got reduced from 12% to 5%. Corrective spectacles have got reduced from 12% to 5%. At the same time, the third important sector which got impacted is affordable education. Under that, most of the educational products were taxed at 12%. Good to note, the government is conscious to ensure the educational products have got reduced to nil rate of tax. Almost all educational products like maps, charts, globes, pencils, sharpeners, crayons and pastels, exercise books and notebooks, eraser have got reduced from 12%, 5% rate to nil rate of tax, which is a welcome sign. The fourth important sector which has got impacted because of GST 2.0 is tractor tires and parts, which has got reduced from 18% to 5%. Tractors have got reduced from 12% to 5%. Specified biopesticides, micronutrients have got reduced from 12% to 5%. Drip irrigation system and sprinklers have got reduced from 12% to 5%. Agricultural, horticultural and forestry machines for soil preparation, cultivation, harvesting and threshing have got reduced from 12% to 5%. The fifth important sector which got impacted by the GST 2.4 reform is automobile sector. Under that, petrol and petrol hybrid vehicle, very important, petrol and petrol hybrid vehicle, LPG and CNG not exceeding 1200 cc and 4000 mm has got reduced from 28% to 18%. Diesel and diesel hybrid cars not exceeding 1500 cc and 4000 mm, 28% to 18%. Three-wheeled vehicles have got reduced from 28% to 18%. Motor vehicles 350 cc and below, 28% to 18%. Motor vehicles for transport of goods have got reduced from 28% to 18%. There is also a saving on electronic appliances, wherein the air conditioners GST rate have got reduced from 28% to 18%. Television above 32 inches have got reduced from 28% to 18%. Monitors and projectors have got reduced from 28% to 18%. Dishwashing machines have got reduced from 28% to 18%. Not only that, one of the important reform that has happened with respect to GST is with respect to registration process. Government, as part of the GST 2.0 reform, has also brought measures for facilitation of trade. Under that, the first important measure is with respect to sanction of risk-based provisional refund to facilitate refund claims on account of zero-rated supply of goods or services or both. That is, export of goods or services or both are supplied to a special economic zone, developer, unit for authorized operations. The Council recommended amendment in Rule 91 Sub-Rule 2. 91 Sub-Rule 2 is a very important rule, grant of provisional refund. Under that Sub-Rule 2, the proper officer, after scrutiny of the claim and the evidence submitted in support thereof, on being prima facie satisfied that the amount claimed as refund under Sub-Rule 1 is due to the applicant in accordance with the provisions of subsection 6 of section 54, shall make an order in form GST RFD 04 sanctioning the amount of refund due to the said applicant on a provisional basis within a period of not exceeding 7 days from the date of the acknowledgement under Sub-Rule 1 or Sub-Rule 2 of Rule 90, provided that the order issued in form GST RFD 04 shall not be required to be revalidated by the proper officer. My dear friends, accordingly, it is very important to understand, here is an amendment brought by the 56 GST Council meeting, wherein they clearly provided that sanction of 90% of the refund claimed as provisional refund by the proper officer. So there is a possibility of giving a provisional refund if a proper officer authorizes, or on the basis of identification and evaluation risk by the system. So the system intervention, I think it is going to be an AI based intervention where the government is planning to bring under the GSTN so that the refund can be processed provisionally. However, in exceptional cases, the proper officer may, for reasons to be recorded in writing, instead of granting refund on provisional basis, proceed with the detailed scrutiny of the refund claim. My dear friends, the Council recommended issuance of a notification to notify certain category of registered person who may not be granted refund on provisional basis. The provision shall be operationalized from 1st November 2025. My dear friends, the second important measure for facilitation of trade is proposal for risk-based provisional sanction of refunds arising out of inverted duty structure. My dear friends, the council recommended amending section 54 subsection 6 of the CGST Act 2017 to provide for sanction of 90% of refund claimed on provisional basis. In case arising out of inverted duty structure, we all know about the concept of inverted duty structure, IDS, on similar line as is presently available for refund in respect of zero rated supply. It has been decided, my dear friends, by the government that, central government, that pending requisite amendments to the CGST 2017 Act, instruction shall be issued by the Central Board of Indirect Taxes and Customs to direct central tax field formation for grant of provisional refund equivalent to 90% of amount claimed as refund arising out of inverted duty structure on the basis of identification and evaluation of risk by the system, as in the case of provisional refunds on account of zero rated supplies. This shall be operationalized from 1st November 2025. The third important amendment in CGST Act is to provide for GST refunds in respect of low value export consignments. The Council recommended amendment to section 54 subsection 14 of the CGST Act 2017 so as to remove the threshold for refunds out of exports made with the payment of tax. This will particularly help small exporters making exports through courier, postal mode, etc. The fourth important aspect is simplified GST registration scheme for small and low risk business. In order to simplify the registration process, the Council has recommended the introduction of optimal simplified GST registration scheme, wherein registration shall be granted on an automated basis without verification by the officer within 3 working days from the date of submission of application. So this 3 working days is very crucial to understand. A new registration wherein a case of low risk applicants who have their own assessment determine that their output tax liability on supplies to registered person will not exceed 2.5 lakh per month, inclusive of CGST, SGST, UTGST, IGST. The scheme will provide for voluntarily opting into withdrawal from the scheme. This will benefit around 96% of new applicants applying for GST registration. This shall be operationalized from 1st November 2025. The fifth important introduction is with respect to simplified registration scheme for small suppliers supplying through electronic commerce operators. The Council approved in principle the concept of simplified GST registration mechanism for small suppliers making supplies through e-commerce operators across multiple states facing challenges in maintaining principal place of business in each state as currently required under the GST framework. The detailed modalities for operating the said scheme will be placed before the GST Council shortly. And the sixth important thing is with respect to amendment in the place of supply provisions for intermediary services under section 13 subsection 18 of the IGST Act. The Council recommended omission of clause B of section 13 subsection 8 of IGST Act 2017. Accordingly, after the said law amendment, the place of supply for intermediary services will be determined as per default provisions under section 13 subsection 2 of the IGST Act 2017. That is the location of the recipient of such services. This will help Indian exporters of such services to claim export benefits. My dear friends, the last important amendments are with respect to section 15 and section 34 of the CGST Act in respect of post-sale discount. There are other measures which are also being provided by the GST Council, that is with respect to retail sale priced valuation under GST for pan masala, cigarettes, gudka, chewing tobacco, zarda, scented tobacco and unmanufactured tobacco. Accordingly, consequent amendments in CGST Rules 2017 and notifications will be carried out. My dear friend, the recommendation has been presented as of now. There are many more amendments that need to be brought in, though that will consume due process of law course of time. My dear friends, all this price reduction of two rate structure, that rate rationalization has to go through a anti-profiteering provision. We all know from 22nd September 2025, the new rate structure is going to be applicable. That is, many of the products have moved from 12% to 5%. Some products have moved from 28% to 18%. Some products have moved from 18% to 5%. Certain products got reduced from 5% to nil rate of tax, especially educational products. When that is a scenario, the MRP has to be reduced by the retailers. Not only that, dealers, traders, manufacturers who got input tax credit benefit. Beyond that, service providers also would have got benefit because of input tax credit. Subsequently, the rate reduction has to pass on to 1.4 billion population of this country. That is 140 crore population of this country. If the price reduction is not getting passed on to the ultimate consumer, that means the effort taken by the government with respect to rate rationalization is going to be exploited by the industry. Accordingly, to ensure there is a check on the price reduction, government, when they contemplated GST law, they brought section 171 of the CGST Act 2017. The same provision is also there as part of the state GST, that is state GST, that is SGST, UTGST 2017. My dear friends, for the benefit of all the listeners, I thought it is very important that I will highlight about anti-profiteering measure. Under section 171, which got introduced with effect enforced from 1/7/2017, by notification number 9/2017 to 28/6/2017, before the GST got implemented, anti-profiteering measure was implemented. As part of section 171 anti-profiteering measure, section 171 subsection 1, any reduction in the rate of tax on any supply of goods or services or the benefit of input tax credit shall be passed on to the recipient by way of commensurate reduction in prices. 2 is, that is section 171 subsection 2. The central government may, on recommendation of the council, may by notification constitute an authority or empower an existing authority constituted under any law for the time being enforced to examine whether input tax credits availed by any registered person or the reduction in the tax rate have actually resulted in the commensurate reduction in the price of the goods or services or both supplied by him. Provided that the government may by notification on the recommendation of the council specify the date from which the said authority shall not accept any request for examination as to whether input tax credits availed by any registered person or the reduction in the tax rate have actually resulted in the commensurate reduction in the price of the goods or services or both supplied by them. My dear friends, accordingly, anti-profiteering measure has to be invoked if you find that as per section 71, if they have violated the anti-profiteering measures. By the way, how do you find whether a dealer or a manufacturer or a trader have violated anti-profiteering provisions? It is by checking the price. On 22nd September, kindly go and check whether the rate reduction has been given effect to. Step 2, check the MRP of the same product when you bought it in the last month with the price that you paid in the current month. If you find that this price is the same, that means the manufacturer or the dealer or the trader or the retailer has not passed on the GST benefit to the ultimate consumer. Whether the industry is going to withdraw all the products and going to issue a new MRP, or they're going to ask the retailers to stick a new MRP over the existing MRP, is a very practical question that we need to see. Second important thing, many people would actually pause their consumption at this point of time because everybody is aware that on September 22nd, there is going to be a revised rate structure. Only after the revised rate structure comes, people will start consuming. That means there's going to be huge consumption after the rate reduction. So ultimately, next 2 weeks will be there will be a dip in the consumption of the products where the rate reduction has happened. Accordingly, my dear friends, the anti-profiteering measures to be invoked by the consumer as a due process of law. As I explained you, the anti-profiteering provision addresses two important aspects. One is reduction in the tax rate. For example, some of the products, the rate would have got reduced from 12% to 5%. So that will ensure the price of the products will come down. Second, benefit of input tax credit. There are some inputs on which the rate reduction has happened. Ultimately, the input tax benefit has to be passed on to the consumer. If these two scenarios arise and you find that the price has not got reduced, then you have an opportunity to go and complain before standing committee or state steering committee, and complaint must be include evidence of the GST benefits have not been passed on. From 1st October 2024 onwards, it is not a mandate or there is no provision to complain before National Anti-Profiteering Authority. Hereafter, all the complaints will go to GST Appellate Tribunal Principal Bench. Who can file? Any consumer or stakeholder can file the complaint with the Anti-Profiteering Authority. Second, with the State Screening Committee, Standing Committee and GST Appellate Tribunal from October 2024. What are the evidences required? Invoices, price list, communication with suppliers, etc. There is a methodology to identify profiteering. The methodology is pre and post GST prices. What are the profit margin, whether the profit margin is the same or it has got reduced or it has increased for the dealer or the manufacturer or the retailer post GST reduction. Second, checking the cost structures as well. Even such and seasonal measure can also be done by the GST department if there is a possibility of anti-profiteering violation. Second, investigation may also include examination of invoices, cost sheets and ITC claims. If profiteering is established, the authority can order price reductions, refunds with interest, penalties, or even cancel the GST registration. These are the impact of anti-profiteering provision. We are all happy, we are all celebrating at this juncture GST 2.0. At the same time, be cautious to check from September 2022 whether the prices of the product got reduced. Because ultimately the government, that is GST Council, that is Union Finance Ministers, State Finance Ministers, Group of Ministers have come forward to reduce the rate into two-rate structure only to ensure that the consumer gets benefited, and if the consumers are not benefited, then the entire purpose gets defeated. So it's very important that the anti-provisioning measures are checked by enforced by the